Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday, the 25th of September 2020. And this has proven a most exciting, though daunting week for gold and silver investors. And we shall explain why. It all started really on Monday, and for each consecutive day, with perhaps the exception for today, we have seen gold and silver prices continually reach lower levels. And quite frankly, this has frightened a number of investors who originally held the belief that we were going to see gold and silver go to the moon anytime soon. Now, in case you haven't listened to the videos we produced, we would suggest that you do so if you have the time, and to help aid you to do this, we've provided links in the description box below. On Monday, we published a video entitled Why Silver Prices Crashed Below Multiple Support Levels, where silver prices fell below $25 and into the early $24 region, settling at $24.41. Then on Tuesday, gold price declines, but is it only temporary? Where we highlighted that not only did gold go down, but silver had dipped further to $24.29. Then on Wednesday, why gold and silver continues to fall, at which time the publication was produced. Silver had receded to $23.01, while gold stood at $1,865, though silver had been as low as $22.95 that day. And then yesterday, a video entitled Why Silver Prices Crashed, where, although silver was hovering around the $23.21 level, it had been as low as $21.70. Now today, or at least as at 1820 GMT plus 1, which is the time we're producing this, gold is currently trading at $1,863, a similar price to the price that it was when we produced this podcast on Wednesday, but it has been as low as $1,853. And silver is managing to hold just above the $23 level, and is currently $23.05, though it had dipped again today to $22.48. Now, we did say yesterday and the day before that $22.50 would prove a support level for silver, and so far, today at least, it has managed to be the case. Now, interesting though, silver has not managed to rise above $23.32 today, and looks like it may settle at or around the $23 mark by the end of the day. Now, what will be interesting will be to see if it closes just above it or just below it. Now, tomorrow we're going to give our normal weekly update, which will be far more detailed than what we're reporting on today. Now, that said, it will, though, come as no surprise that the dollar index is up again today at 94.69, some arguing the major reason for the fall in the price of precious metals, though we gave a number of reasons yesterday and the day before, while just the dollar value is not the only factor affecting precious metal prices. Whilst the US equity market has not closed as yet, generally shares are up around, or at least the indices are up around 0.5%, and as far as Europe is concerned, they have generally closed down between 0.5% and 1%. Now, we shall cover tomorrow why we believe gold could indeed fall back to $1,800 and silver could potentially test $20, but more on that tomorrow. We shall also highlight why it's not inconceivable that both gold and silver could actually reach their short or medium-term bottoms next week, which could act as a base for their next leg up, so to speak. But again, we shall cover that tomorrow. Are you getting the impression we are perhaps suggesting that you tune in tomorrow? Now, There was an interesting article in Bloomberg today, which we simply must read to you, and we apologise to those who do not like us to do this. But whether you like Bloomberg or not, they do come out with some interesting articles. Whether they're classed as biased or not, that's another matter. But the information generally is pretty sound, though there may be a biased tilt towards it. But then, name a news media outlet in today's world where that isn't the case. Anyway, so there is a Bloomberg article that we're going to read, which basically highlights that the banker to Her Majesty the Queen is positive sterling and negative the US dollar. And we would envisage that you would find this of interest, because if you live in the UK and we believe sterling may strengthen, that would have a downward effect on precious metal prices if it strengthens against the dollar. And of course, if you're in the United States and you buy your gold and silver in dollars, then any fall in the value of the dollar will raise gold and silver prices. So let's take a quick look at this Bloomberg article. It's not very long. Bloomberg article dated September 25th, 2020, 10:27 a.m. GMT+1. Headline: Queen's banker is betting hundreds of millions on Brexit deal, by Danny Berger. The private bank to Queen Elizabeth II is moving millions of dollars in a bet there will be a Brexit deal that defies widespread market skepticism. Coutts & Co. has moved its US stock holdings to an exchange-traded fund that would benefit from a rally in the pound if the UK government defies the odds to secure a new trading relationship with the European Union. The firm said it was responsible for most of the $350 million outflow from the London-listed Lixor S&P 500 ETF over the past week. That was then invested into a sterling-hedged version of the same fund. The allocation would outperform if the currency rebounds against the dollar after falling 4.6% in September, on track for the worst monthly slide since October 2016. We think the pessimism of the United Kingdom is overdone, said Alan Higgins, Chief Investment Officer at Coutts, with about £30 billion or $38 billion in assets overall. Based on game theory, we think there's a deal to be done between the UK and Europe. Markets will be surprised, and that will result in higher sterling. Sentiment towards UK assets is tumbling anew. Domestic stocks are on track for a 5.2% decline this month, the worst since the March rout. The EU has stood firmly against Prime Minister Boris Johnson's bid to rewrite parts of the withdrawal agreement, setting the stage for a chaotic exit next year. Coutts, a unit of NatWest Group, is using the Lixor ETF to give UK private clients exposure to US stocks without taking currency risk. The money manager is replicating a similar strategy using derivatives in its multi-asset funds. Modest interest rate differentials across the Atlantic also mean it's relatively cheap to hedge against currency swings. Even if a Brexit agreement remains unresolved, Higgins still sees merit behind the sterling-hedged S&P 500 position. A protracted period of dollar weakness and a low bar for the pound to rebound from its post-referendum quagmire would boost the ETF investing strategy. The bias is for the dollar to go down against all currencies, he said. Even if sterling is in a bad place, there's an upward bias on sterling. End of article. Okay, so you may be wondering, why should I, living in America, even be interested in this? Well, we know Coutts & Co. They're not generally a bank that acts in a chaotic, haphazard, or over-speculative manner. They normally do their homework, and generally tend to be one of the most conservative amongst banks. After all, they do not wish to damage their reputation, their global reputation of being banker to Her Majesty the Queen and most of the royal family. What is clear, though, from their actions is that they see the US dollar weakening in the not-too-distant future, and by undertaking the funds transfer they have, suggests they see this happening reasonably soon. Not necessarily next week, but certainly within a couple of months, if not sooner. Now, admittedly, Coutts & Co. are not always right, but taking such a bold move suggests to us that they may know something others do not. And even if they are not privy to the private discussions of central bankers and their plans moving forward, for such an established institution to take this action has to alert the rest of us that something may be afoot. Now, if they're right, and the US dollar does fall considerably against the general basket of currencies, we can at least expect gold and silver prices to rise in US dollar terms. Quite possibly, if the relationship is only vis-a-vis sterling and the dollar, then of course we should, unless there is a general rise in precious metal prices, expect to see gold and silver prices go down in sterling terms. But we are uncertain at present whether this is just a currency play, sterling versus US dollar, or whether it is a move with wider implications, and the article does seem to suggest that Coutts & Co. are of the opinion that the dollar is likely to fall against a basket of currencies, which of course then has implications for the dollar index. Now, of course, when we know more, we shall let you know. But meanwhile, do, and forgive me for saying this again, tune in to our weekly update tomorrow, and we shall cover some of this, and as already mentioned, highlight why we suspect it could very well be the case that the next week or two will see the bottoming of gold and silver prices before they make their next move up. Thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. And do share your thoughts on this or any of our other videos below. So until tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.